Dr. O, you and I talk about the housing industry probably at least once a week. It's where you spend a fair amount of your time and focus. Certainly you have a relationship with Zillow. Zillow released its mid-month sort of state of the housing industry.
Best team in housing.
Home value and sales forecast every month at Zillow. And yeah, I mean, honestly, I mean, the data that your group produces is it's
the best team in housing. It's localized data, localized. I mean, at the zip code level, every home in America is the best. It's the best for research. This is a little plug, follow me, of course. We got a lot of stuff. We got a lot of cool stuff. And I think a lot of people forget the company was founded on, just transparency.
Mm-hmm.
Remember the days where you had to look through classified ads to find a home?
Yes.
Or you had to drive around for hours around different neighborhoods to find a for sale sign?
Of course.
It was a nightmare. And Zillow fixed that. And so I think, I do love the company. I do love the company. There's a lot going on. And I got so much stuff to talk about when it comes to
So let's talk about sort of the latest trend. And, this is not to say a little bit of a change up, but, Zillow's now kind of changing the way that it's looking at the direction of the housing market, or is seeing in the data that the housing market is changing, which I think is probably more correct than what I initially had said. And so for the balance of 2025, there's the forecast is softer growth for home values, and existing home sales in 2025. You think mortgage rates, I mean, the big Z thinks that mortgage rates are going to decrease slightly, in the coming months, and then probably hang out and be relatively flat. So to distill that, home prices are just kind of sliding along. There might be growth in some markets. You got, the maps that Zillow does is pretty incredible. And you can see market by market, sort of the direction, but we're not seeing crazy swings, up or down. Interesting markets that are up. I mean, like when I see like Rochester, New York as like being like, kind of a darling, community, nothing against Rochester, but I mean, I lived in Erie, Pennsylvania for a long time, it kind of the same kind of town, a town that had its heyday a while ago, and is trying to find footing as whatever it is next or whatever it's going to be next. You see those numbers up, and then you take a look at some of the markets that were screaming along.
Yeah.
Starting to go in the opposite direction. And it's a little bit of a change up. So specifically this year, Zillow is projecting, home values to increase by less than 1%, 0.6%.
Yeah. Roughly flat. And, and why is that? Well, why is that? Because actually you have a couple factors. The first one is, we've reported on this, the escalating policy uncertainty reduces, kind of slows down the U.S. economy, reduces home buying demand, and the slower labor market means the residential mobility is also slower, right? So that's the first, I think that's the negative. The silver lining, mortgage rates are declining. And the reality is in our data, but also historically, right? And I think every economist who has measured this would agree, mortgage rates have had an outsized impact on the housing demand, than everything else. And so income growth slows. Okay. But mortgage rates declining a whole lot and affordability improving is a positive for home buying demand. Now, of course,
I just checked in with Freddie Mac, and I hadn't looked at Freddie Mac for probably, I don't know, maybe a month. 30-year, and this is the average, the national average, right? So, I mean, you're going to be within, I don't know, probably 1/8 of a point, depending on where you live. I don't know that there's that much variance to this. 30-year fixed rate at 6.65%. It's not a bad number. The historic average is what? 7.8%. 7.25, 7
That's
point.
right. That's right. It's not a bad number. And I personally, I mean, if you're in the housing market today and you're trying to compare, say you're going to be in your home for the next 7 years, right? You know, you could go with an adjustable rate mortgage, and you could lend yourself, you know, maybe buy a couple points and you lend yourself with a 5.7% mortgage rate. You could be below 6. It's possible. And so, I mean, there are ways to do this, right? To really lower your monthly payment. You know, sure, you're going to be in the house for 7 years and then rates are going to jump after. But if, you know, if your timeline, depending on your timeline, you could do this. You could also refinance later. You could go in the house, right, on a low rate, you know, using your adjustable rate mortgage, move, you know, stay in there for a little while. Mortgage rates drop, refinance. I mean, look, there's so many ways to do this.
You don't give financial advice, but what you're saying
There are
is
options.
there are options.
If you really want to move, you can move. And my advice, of course, is to use the tools. There's mortgage calculators. Zillow has this thing called buyability. It will show you every home on the map that you can afford, and it will change with mortgage rates fluctuations. I think that's awesome. But look, going back to the forecast, we have rising inventory, right? So you have more sellers coming on the market. I think the number of sellers is up something like 12 or 15% from a year ago. More sellers on the market, more inventory than we had last year. I think in February, we had something like 1 million homes on the market. More than any February since 2020. And 15% more homes on the market than we had last year. Mm-hmm. You have, so homes are taking a little bit longer to sell, right? The market is still cooling from the pandemic hot days. Yeah. And ultimately, you know, and sellers are returning slowly into the housing market. Some of them might pull back a little bit if they see mortgage rates increasing or they see some uncertainty, right? Mm-hmm. But ultimately things are similar to last year with slightly more inventory, which means more options for buyers. Yeah. More bargaining power for buyers. This is at the national average, right? This is national level. And so I expect home sales to end the year roughly, you know, where they were last year, maybe a little bit above that.
I mean, Zillow, I mean, you know, your organization is saying that, you know, that even in spite of everything that we just talked about, that, you know, maybe a 1.1% increase in existing home sales anyway, year over year. Let me ask you this.
Now, of course, this depends entirely on what happens in the labor. Like if the labor market crap. So remember, unemployed people can't get a mortgage in the first place is what I tell everybody, right? And so as long as the labor market continues to, hum along just fine. And yes, it might slow, but if it doesn't crack, in other words, if we don't go into a recession, right, then the forecast looks great. It's fine. The economy's slowing, but hum along. The labor market humming along. The housing market tends to follow the labor market humming along. And so we'll be just fine. Now, of course, if you start to see cracks in the labor market, you know, I'm talking about big cracks, right? And we start to see the unemployment rate inching much higher than the Fed anticipated. Mm-hmm. With still some pressure on the price side because of everything else, tariffs, all that stuff, right? And the Fed is late to cut interest rates. Mm-hmm. Then we have something else. Like it's a different problem, right? Yeah. But we'll worry about that problem when we get there.
Okay. All right. Well, I appreciate your thoughts as always, Dr. Orphe.